Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color Podcast. This is a weekly podcast that is dedicated to providing our listeners with a broad overview of the global financial markets, including a special focus on the Kenyan markets. And in order to deliver on this objective, we have structured this podcast to begin with an overview of the global markets so as to give you a big picture perspective of the global economy. This is then followed by the Kenyan segment where we review the performance of the domestic markets with a view to covering all the major asset classes. And finally, we wrap up the podcast by addressing the topical issue for that week so as to bring you up to speed with the latest financial headlines. Ladies and gentlemen, this here is episode number 159, and in this episode, we're reviewing the performance of the global markets during the 19th week of 2025, and that is from Monday the 5th to Friday the 9th of May. And without further ado, this is your host Jamhuri, and together, let's dive right in. We kick it off in the United States, where the Federal Reserve decided to keep its policy rate on hold at the current range of between 4.25% to 4.5%. The policy setting Federal Open Market Committee noted that the risks of higher inflation and higher unemployment have risen over the past 1 month. The central bank is walking a fine line as it contends with the uncertainty created by President Trump's ad hoc tariff policies and the mixed economic indicators of resilience from the U.S. labor market and weakness as the U.S. economy contracted in the first quarter of 2025. The Fed Chairman Jerome Powell dismissed the idea of a preemptive rate cut to offset the impact of tariffs, given that inflation was still running above the Fed's target rate of 2%. The chairman further added that the Federal Reserve needed to analyze more data in order to determine the impact of tariffs on the U.S. economy. And over to China. China's exports increased sharply in the month of April, driven by increased shipments to Southeast Asian countries, which helped to offset a sharp drop in exports to the United States due to the prohibitive tariffs implemented by President Trump. According to data released by the Customs Authority on Friday, Chinese exports increased by 8.1% in the 12 months to April 2025, even as China's exports to the United States plunged by over 21% over the same period. In response to the slump in exports to the United States, the Chinese government is helping exporters to divert their export goods into the domestic market, a move that threatens to drive the Chinese economy into deflation as exporters undercut each other in order to dispose their goods. China's domestic market acts as a crucial buffer for exporters as it provides an alternative market for their goods, with the government coordinating efforts to boost domestic consumption. In the United Kingdom, on Thursday, the Bank of England decided to cut its policy rate by 25 basis points from 4.5% down to 4.25%, a move that is likely to bring relief to both producers and consumers across the country. The central bank reduced its benchmark rate against a backdrop of weak economic growth and uncertainty around global trade due to President Trump's ever-changing tariff policies. This rate cut was widely expected by the markets, especially after inflation cooled down from 2.8% in February to 2.6% in the 12 months to March. The Monetary Policy Committee was, however, divided in its decision-making, with 5 out of the 9 members voting for the rate cut, whilst another 2 members voted for a larger 50 basis point reduction, and the remaining 2 members voted to keep the policy rate on hold. On Wall Street this past week, the Dow Jones Industrial Average slipped on Friday as investors look forward to the much-anticipated trade talks between the United States and China this weekend. The beginning of trade talks with China comes on the back of a successful trade deal between the United States and the United Kingdom. In this deal, UK exports will be subject to a 10% tariff rate, which appears to be the baseline rate that the United States has adopted for most countries across the globe. The 30-stock Dow fell almost 0.2% during the week to settle at 41,249, whilst the S&P 500 slid by about 0.5% to close the week at 5,659, and the tech-heavy Nasdaq Composite dropped by 0.3% and finally ended the week at 17,928. In the government bond market, the yields on U.S. Treasuries were broadly flat on Friday as investors remained optimistic about the United States striking more trade deals on tariffs with international trade partners. After the United Kingdom became the first country to secure a trade deal with the United States, markets are more hopeful that more trade deals will be negotiated in due course, with investors looking forward to this weekend's meeting between the United States and China. Policymakers have warned that Trump's tariffs will likely lead to higher prices and slower economic growth later this year. Additionally, higher tariffs could lead to a disruption of global supply chains and increase upward pressure on inflation that could in turn lead to slower economic growth and higher unemployment. In response to the foregoing, the yield on the benchmark 10-year Treasury bond gained by about 1 basis point to 4.38%, whilst the yield on the 2-year Treasury note edged lower by less than 1 basis point to settle at 3.88%. And just for your information, bond yields and prices move in opposite directions, and 1 basis point is equal to 0.01%. In the oil markets, the price of crude oil rose on Friday and posted a weekly gain on the back of easing trade tensions between the United States and China after the U.S. announced a trade deal with the United Kingdom. Senior officials from the United States and China were scheduled to meet on Saturday the 10th of May with a view to resolving the ongoing trade war that has had a negative impact on the demand for crude oil. For the week, both benchmarks were up more than 4%, with the price of the global benchmark, Brent crude, coming to a close at $63.91 a barrel, whilst the price of the U.S. benchmark, that is West Texas Intermediate crude, this settled at $61.02 per barrel. In the precious metals market, the price of gold rose more than 1% on Friday as the dollar ticked lower, while the market digested the news of a trade deal between the United States and Britain and looking forward to the weekend meeting between the United States and China. President Trump said that an 80% tariff on Chinese goods was around the right level as senior officials from both sides prepared for negotiations this weekend in order to contain the ongoing trade war. Gold is considered as the ultimate safe haven asset and is traditionally viewed as a hedge against inflation and economic uncertainty, and tends to thrive in a low interest rate environment since it doesn't provide a regular yield like a bond. The price of spot gold has risen more than 27% so far this year and was up by about 3% this past week to finally settle at $3,340 per ounce. In the cryptocurrency market, cryptocurrencies extended their rally to end the week, with Bitcoin hitting its highest level since February as it once again broke above the key psychological level of $100,000 per coin. The announcement of a trade deal between the US and the UK and the meeting between the United States and China has reduced the overall risk aversion for assets such as equities and cryptocurrencies. According to CoinMetrics, the price of Bitcoin was up more than 6% this past week and was on track for its fourth consecutive positive week. At its peak during the week, Bitcoin was trading above $104,000 before correcting slightly on Friday and was last seen hovering just above $103,000 per coin. We now change scene to the Kenyan financial markets, and as is the norm, we start by looking at the domestic foreign exchange market, where during the past week, the Kenyan shilling was trading sideways versus the US dollar, and according to data obtained from the Central Bank of Kenya, the official exchange rate for the dollar was quoted at 129.27 compared to 129.34 that was recorded the previous week. Meanwhile, the sterling pound was priced at 172.08 and the euro was valued at 146.13. And on the regional front, one Kenyan shilling was changing hands for 28.30 Ugandan shillings and 20.87 Tanzanian shillings, and to the Rwandese franc, it was posted at 10.93. The Kenya shilling continues to trade within a narrow range versus the US dollar, and barring any exogenous shocks to the domestic economy, we expect the shilling to remain range-bound in the short term. However, in the longer term, the outlook for the shilling remains negative, and this is evidenced by the country's excessive national debt, which now stands at above 70% of the gross domestic product and consumes about 60% of total tax revenues. On foreign exchange reserves, during the past week, Kenya's usable foreign exchange reserves recorded a massive increase of $542 million for a grand total of $10.29 billion, which is equivalent to 4.6 months of import cover. This level of reserves is in line with the central bank's statutory requirement to endeavor to maintain at least 4 months of import cover. However, despite this fact, Kenya's foreign exchange reserves remain under intense pressure, and this is partly due to the persistent current account deficit, where imports perpetually exceed exports and is further exacerbated by our ever-increasing external debt repayments that have pushed the country to the precipice of a sovereign debt default. Please note that in its weekly bulletin, the Central Bank of Kenya does not provide any explanation for the change in foreign exchange reserves. In the interbank market, During the past week, the interbank market was sufficiently liquid and was also supported through open market operations. For your information, open market operations refers to the purchase and sale of government securities by the central bank in order to regulate money supply and credit in the interbank market. The average interbank rate, which is the rate that banks use to lend to each other, mainly on an overnight basis, this was broadly flat at 9.9% compared to a rate of 9.94% the previous week. Meanwhile, the excess reserves held by commercial banks in relation to the cash reserve ratio of 3.25%, this stood at 14.3 billion shillings. For your information, the cash reserve ratio is a statutory requirement that specifies a percentage of total customer deposits that commercial banks are required to hold with the central bank for liquidity management. In the government securities market, the weekly Treasury bill auction was held on Thursday, the 8th of May, and the central bank received bids totaling to 52.6 billion shillings against an advertised amount of 24 billion shillings, representing a performance rate of about 219%. The central bank ended up accepting a total of 50.7 billion shillings, and the results of the auction were as follows. The 91-day rate dipped by 2 basis points to average out at 8.38%, whilst the 182-day rate was a shade lower at 8.60%, and the 364-day rate remained unchanged at 10% flat. In the primary bond market, the auction for the reopened 20-year Treasury bond was held on Wednesday, the 7th of May, and the central bank received bids totaling to 54.3 billion shillings against an advertised amount of 30 billion shillings, representing a performance rate of about 181%. The bond on sale was a 20-year bond with 7.6 years left to maturity, and the central bank accepted 43.5 billion shillings at a weighted average rate of 13.64% compared to the bond's coupon rate at 12% flat. At the Nairobi Securities Exchange, during the week, the equities market was on an upward trajectory, with the NASI gaining the most by 1%, whilst the NSE 10, the NSE 25, and the NSE 20 gained by 0.9%, 0.5%, and 0.1% respectively. This takes the year-to-date performance to gains of 2.5% for the NSE 20 and 1.2% for the NASI, whilst the NSE 10, the NSE 25 have recorded losses of 3.2% and 1.8% respectively. The market's performance was driven by gains recorded by large cap stocks such as Equity Bank, Safaricom, and East African Breweries, which increased by 2.9%, 2.8%, and 1.5% respectively. This performance was however weighed down by losses recorded by other large cap stocks such as Absa Bank, Standard Chartered Bank, and Diamond Trust Bank, which declined by 3.2%, 2.9%, and 2.4% respectively. And in related news, during the week, Safaricom PLC released its financial results for the period ending the 31st of March 2025. The group's profit after tax increased by 7.3% to 45.8 billion shillings, and this was largely attributed to an 11% increase in total revenues, which soared to 388.7 billion shillings. This performance was, however, weighed down by a 16% increase in operating costs, which rose to 216.5 billion shillings. Meanwhile, M-Pesa, the mobile money platform, continued to be the main moneymaker for Safaricom, contributing about 42% of total service revenues and recording a growth of about 19% to deliver revenues just shy of 140 billion shillings. Up next is our topical issue, and this week we're looking at Kenya's economic growth in 2024. On Tuesday, the Kenya National Bureau of Statistics released its economic survey for 2025, in which it reported that the Kenyan economy grew at a slower pace of 4.7% in 2024, compared to a rate of 5.7% in 2023, and this was mainly weighed down by a subdued performance in the agricultural sector, as well as a tight credit market. The agricultural sector, which contributes more than 20% of the country's gross domestic product, grew at a slower rate of 4.4% in 2024, compared to 7.7% in 2023, and this was mainly attributed to reduced maize production and a dip in horticultural exports to the European markets. The country's nominal gross domestic product, which measures the total value of goods and services produced within the country, this increased from about 15 trillion shillings in 2023 up to 16.2 trillion shillings in 2024. According to the Bureau, the Kenyan economy generated 782,000 new jobs in 2024, which was a decline of 7% compared to the 848,000 new jobs that were created in 2023. The slowdown in Kenya's economic growth was a reflection of the global trend, in which global economic growth reduced from 3.3% in 2023 down to 3.2% in 2024. In addition to the global trend, the Treasury Cabinet Secretary attributed the slowdown in economic growth to fiscal constraints, which refers to the government's difficulty in raising additional revenues. This was further exacerbated by high interest rates in the credit market, in addition to the countrywide demonstrations that almost shut down the economy in 2024. Despite the challenging economic conditions, both globally and domestically, the Treasury still projects that economic growth will pick up in 2025, driven mainly by a robust services sector and supported by lower interest rates, as well as favorable weather conditions that are expected to boost production in the agricultural sector. And on that note, we come to the end of this week's podcast. Thank you for listening to the Market Color podcast, and I hope that you found it to be useful and informative. And if so, please consider supporting this podcast by becoming an active subscriber with a minimum monthly contribution of just $10. For more information on how to become an active subscriber, please check out our support link at buzzsprout.com/1999543/support. And as always, your support is very much appreciated. For your information, the Market Color podcast is hosted by Buzzsprout and is also available on all the major hosting directories, that is Apple Podcasts, Spotify, and Amazon Music. And if you have any ideas or feedback on how we can improve this podcast, please feel free to reach me on the following email address. That is jamhuri@gmail.com. Jamhuri spelled Jamuhuri. Once again, thank you for your continued support, and I look forward to interacting with you again next week. And in the meantime, please do have yourself a blessed and fantastic week ahead. And remember, management is doing things right, whilst leadership is doing the right things. Think about it. Thank you, and God bless.